Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This is part 2 of Central Bank Digital Currencies, CBDCs, what they are and why they matter. Sweden. In Europe, Sweden is blazing a trail with its E-krona project, which focuses on building a cashless society. As one of the countries with the lowest cash usage worldwide, Sweden's central bank, Riksbank, began the E-krona initiative to ensure that the public still has access to a state-backed means of payment. The pilot program has explored everything from offline payment scenarios to blockchain-based technologies, demonstrating Sweden's proactive approach to anticipating financial needs in a digital age. Bahamas. A less populous but equally innovative leader is the Bahamas with its sand dollar, the first fully launched CBDC. Designed to ensure financial inclusion across the nation's many islands, the sand dollar is targeted at ensuring everyone has access to reliable and secure digital payment solutions. These pioneering nations highlight diverse motivations for CBDCs, from financial inclusion to strengthening global economic influence. Their progress serves as a model and learning opportunity for other countries still figuring out their own digital currency paths. Other countries in the research phase. While some nations have started rolling out CBDC trials, many others are still in the exploratory stage, carefully studying their potential benefits and risks before taking action. United States. The U.S. is taking its time, weighing all the options. The Federal Reserve has conducted research and even released reports outlining possible designs for a CBDC. Questions about privacy, cybersecurity, and the impact on the banking system have slowed progress. While there's no official digital dollar yet, the Fed acknowledges that a CBDC could play a key role in maintaining the dollar's international status and modernizing the payment system. European Union. Across the Atlantic, the European Central Bank, ECB, is carefully studying the feasibility of a digital euro. The ECB launched an investigation phase to explore how a CBDC could enhance payment security, support innovation, and respond to a decrease in physical cash usage. Though still in development, a digital euro could unify payment systems across member states, offering a consistent and easy-to-access financial tool. India. On the other side of the globe, India is also investigating CBDCs, with the Reserve Bank of India, RBI, running pilots for both retail and wholesale versions. A digital rupee could boost financial inclusion and reduce the country's reliance on cash transactions, aligning with India's broader push toward becoming a digital economy. Developing nations. Several developing economies see CBDCs as a way to tackle financial exclusion and modernize payment systems. For instance, Nigeria has already launched the Naira, but adoption has been slow due to a lack of trust and education about its use. Jamaica introduced the JAM-DEX, while other countries like Ghana are currently exploring similar initiatives as part of their financial inclusion strategies. In many of these nations, CBDCs could serve as a stepping stone toward greater economic stability and modernization. Governments are cautiously observing early adopters to assess risks like technological vulnerabilities, public trust issues, and impact on commercial banks. As central banks continue to research and experiment, global collaboration could play a significant role in the future of CBDCs. Will we see a world where various CBDCs interact seamlessly across borders? That's an open question. For now, the focus remains on creating solutions that meet local needs while keeping an eye on broader financial trends. Advantages of CBDCs. Central Bank Digital Currencies, CBDCs, are gaining attention for their potential to address inefficiencies in traditional financial systems. While concerns about privacy and implementation remain, the benefits of CBDCs are significant and could revolutionize how money moves within and across economies. Here's a closer look at the key advantages they offer. Enhanced financial inclusion. A striking feature of CBDCs is their ability to bring financial services to those who currently lack access. According to estimates, over 1 billion people globally are unbanked, meaning they don't have access to a traditional bank account. CBDCs could change that. Why? Because they don't rely on physical banking infrastructure. Instead, they could be made available through smartphones or simple digital wallets. If you have internet access and a phone, you could use a CBDC. Think of farmers in remote villages or workers in urban areas without formal banking. They'd have the same ability to save, send, and receive money as someone with a checking account. For governments, this means they can distribute welfare payments or subsidies directly to citizens. No need for middlemen or delays, just instant access to funds, even in hard-to-reach places. By bridging this gap, CBDCs could unlock economic opportunities for millions who've been left out of modern financial systems. Improved payment systems. CBDCs could take payment systems to a new level by addressing inefficiencies in transactions. Have you ever transferred money internationally and waited days for it to clear? Or paid fees that seem unnecessarily high? CBDCs could offer solutions to both issues. Lower costs. CBDCs reduce reliance on intermediaries, like banks or payment processors, which often charge fees to move money. With a CBDC, the value moves directly between parties, cutting out those extras. Faster transactions. Domestic transfers could happen in seconds, and even cross-border payments that usually involve complexity could become much smoother. Central banks could establish direct systems for exchanging CBDCs between countries, speeding up the process. For example, sending money from the US to Europe could become as simple as tapping a button, with both speed and affordability. Beyond individual use, this also benefits businesses needing to move large amounts of money quickly or efficiently. Monetary policy efficiency. One of the core strengths of CBDCs is their ability to give central banks more direct control over monetary policy. By digitizing the currency, central banks can manage the supply of money with greater precision compared to physical cash or even electronic bank deposits. Take interest rates as an example. CBDCs could enable central banks to implement policies such as negative interest rates more effectively, encouraging spending and investment during economic downturns. Physical cash doesn't have this flexibility. After all, it's hard to deduct interest from the coins in your pocket. Additionally, during times of crisis, such as economic recessions, governments could inject money directly into digital wallets via CBDCs. This bypasses traditional delays in fiscal stimulus programs and ensures funds reach citizens or businesses without any bottlenecks. In essence, CBDCs could act as an accelerator for monetary policy, making it far more responsive to real-time economic needs. Enhanced transparency and security. Fraud, corruption, and illicit activities thrive in cash-heavy systems because of the lack of traceability. CBDCs could significantly reduce these risks by providing a transparent and secure mechanism for transactions. How does this work? CBDCs operate on digital platforms that record every transaction. While individual privacy can still be respected through encryption, central authorities would have visibility into suspicious activities. This means less money laundering. Criminals would find it harder to move dirty money, since each transaction leaves a digital paper trail. Reduced tax evasion. Governments could track financial flows more effectively, ensuring everyone pays their fair share. Furthermore, the technology behind CBDCs, such as blockchain or similar secure systems, adds another layer of protection. Transactions are encrypted and tamper-proof, meaning cyber attacks or fraud would be far more challenging to execute. In a world where financial crime costs trillions of dollars annually, the transparency and security of CBDCs could represent a major shift toward cleaner, safer financial systems. These advantages outline how CBDCs could reshape economies and financial systems, making them more inclusive, efficient, and secure. For individuals, businesses, and governments, the promise of CBDCs is hard to ignore. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.